The 24-hour performance of Dogecoin sees 80% gains, making it the best performing token in the top 100. What began as a project to poke fun at an overly serious industry has turned into something quite serious. Based on this week's rally, calls for a $1 Doge grow louder, but considering its infinite supply and vague use case, is this even possible? A strong Dogecoin performance this past week far surpassed any expectation of normality. Doge started 2021 priced at $0.005. Although it benefited from the overspill of the Wall Street Bets movement around late January, things died down as the movement fizzled out. Months of sideways action was broken this week as Doge pushed through 10 cents resistance to rally as high as 30 cents today. Based on the current price, YTD gains come in at a whopping plus 4,860%. With that, Dogecoin barges back into the top 10 coins, taking 8th place with a valuation of $32.4 billion. Mitsubishi Electric is one of the world's oldest and most well-known electrical manufacturers. It has a similar market cap to Dogecoin, at $32.6 billion. Fundamentally, Bitcoin is deemed valuable because of its limited supply of 21MN coins. Proponents use this scarcity argument to justify the expectation that Bitcoin will increase in value over time. In the case of Dogecoin, circulating supply is currently just under 130 BN tokens, and crucially there is no fixed supply. The current inflation rate is 5.3 BN tokens a year. Taking this into account, is Doge's price performance warranted? At the time our Wall Street Bets was happening, Dogecoin co-creator Billy Marcus commented on his project's rise to stardom, saying he can hardly believe it has taken off the way it has. But when it comes to hitting $1, Marcus said it's something he cannot comprehend, let alone answer. In turn, he asked a rhetorical question by saying, does Dogecoin deserve that? More recently, it seems as though he's warmed to the possibility. He said crypto markets are trying to determine fair valuation, implying Dogecoin's ascent is simply a symptom of price discovery. Mark Cuban, the billionaire owner of the Dallas Mavericks, shocked people earlier this month when he announced his team would accept Dogecoin in payment for tickets and merch. Fans responded by buying $122,000 worth of merch using Dogecoin. Even more surprising was Cuban's statement that he intends to keep the Doge he earns, adding so keep buying. While analysts and those generally rooted in reality dismiss the notion of a $1 Doge, Cuban strongly believes it will happen. A $1 Doge would rank highly in the list of strangest things to have happened in crypto.
Billionaire investor Ray Dalio's fear of governments outlawing Bitcoin, BTC, minus 1.84%, to preserve their monopoly over currencies has come partly true in Turkey. The currency crisis-riddled country announced a ban on cryptocurrencies as a means of payment early Friday, souring the mood in the Bitcoin market. The ban is to take effect the 30th of April. It is considered that by use, crypto assets, in payments may cause non-recoverable losses for the parties to the transactions due to the above-listed factors, and they include elements that may undermine the confidence in methods and instruments used currently in payments. The Central Bank of the Republic of Turkey said in a press release titled "The Regulation on the Disuse of Crypto Assets in Payments." Bitcoin has come under pressure in the past few hours, falling from $63,000 to $60,700 to trade 3% lower on a 24-hour basis. The weakness is almost certainly due to Turkey's decision, as it could set a bad precedent for other crisis-riddled countries struggling to protect their currencies. Morocco has already enacted such a ban and India is expected to introduce one shortly. Dalio warned of coming government curbs last month. Every country treasures its monopoly on controlling the supply and demand. They don't want other monies to be operating or competing, because things can get out of control. The founder of Bridgewater Associates, the world's largest hedge fund, told Yahoo Finance. Cryptocurrency proponents have long argued that Bitcoin is a better means of payment than gold or fiat currencies because its supply is cut by half every 4 years via a programmed code known as mining reward halving. That puts Bitcoin's monetary policy in stark contrast to inflationary policies adopted by the Federal Reserve and other central banks. Citizens of countries facing high inflation and fiat currency crises, such as Turkey, have turned to Bitcoin in the past few years, raising hopes of widespread adoption across the globe. Turkey's inflation topped 16% last week, and its currency, The lira has depreciated by 10% this year, having dropped by 24% in 2020. The country sold almost 11.7 million tons of gold in February, as reported by Arab News. Readers should note that Turkey's latest ban does not stop Turkish citizens from trading cryptocurrencies. They can still buy Bitcoin as a hedge against inflation. However, exchanges could face some complications due to the payments ban. Local exchanges and some global ones are using regulated payment providers like Papara and Ininal to withdraw Turkish lira. Owner Gazupek, cryptocurrency consultant at crypto exchange BTC Turk Pro, told CoinDesk in an email. After the 30th of April, these providers will not be able to send or receive payments between cryptocurrency exchanges. Users will still be able to withdraw Turkish lira through banks in Turkey. Trading will not be affected, Gazupek added.